Hello traders, Gary Wagner here for Trending Markets. Approximately 10 o'clock in Honolulu, 4 o'clock in New York on Tuesday, March 22nd, 2016. And we're looking at the Dow Jones Industrial Average just going into settlement currently and trading down or off, in essence unchanged, down about 0.2%, 39 points in terms of the net loss on the day, 17,584. Standard & Poor's also small net loss on the day, off really a negligible amount, 0.07%, off about 1.5 points at 2041. Now it's traded to a low of 2028. And the high on the day has been 2047, about 6 points off the high. Of course, we do have stops in the market. Those are sitting below 2011. So traders, absolutely no doubt. Interesting day as we view the markets. As I said, in essence, we're unchanged on the day, down ever so slightly, 1.5 points in the Standard & Poor's. However, it must be noted that when we look at our daily charts, and that's what we're doing here, we are getting a candlestick right now. Of course, it's very, very small bodied. It is red in color, although the color is not important as the fact that you have this defined pretty decent range during the day, and at the same time the market opened and closed roughly at the same time. Now couple that with the fact of where the particular price point is as this candle is unfolding, and that is this 2043. Let's go ahead and draw a line across, and of course what that represents is a 23% retracement of the August meltdown, in essence the August meltdown here. Now when we look at that particular price point, we can absolutely see points in which it was supportive, points at which you get relatively zero information from as it tracked through this particular area, points at which it defined really a dramatic sell-off in the market. Of course, first hint, breaking through the 50-day, real hint, breaking through the 200-day, and then breaking through this level of support. Now, it had happened before, but it had recovered before. This time was not to be the case. And then lastly, the one bullish factor that I really see is the fact that we have identified this W, and I believe that this W, in terms of a pattern, is trying to repeat what we saw in the marketplace here, for example, when we went to these record tops. Now, all of that being said, we have some real profits, some real decent profits in the market right now. Realize we're in at 1979. Market's currently at 2041. By any stretch of the imagination, that is approximately, when we look at it, 41 points, 21 points, 61 points times 250 a point. So it's a $15,000 profit on the trade. Now, if in fact this market does get top heavy and we do not move our stops and it comes down and hits us at this 211 or even 210, well, we're still looking at an $8,000 profit. But the difference between 8 and 15 is the amount of equity I'm trying to kind of secure by trailing our stops up as quickly as we can, but at the same time, not trailing them too tight so that during a normal day of trading, in other words, the range that it trades within, we aren't threatened that we're getting hit by that stop and then the market moves in our direction. Now, in terms of the area that I would look for to move this stop, typically I want to look to go to the low over the last 3 days. That's 2026. Low today, 2028. So we're probably going to want to move our stop up to 2024 on a protective stop. And what I'll do is I'll send out a special trade notification to that effect and give you the specific number that I'm looking at. I just want to do some last minute calculations. In fact, I'll probably want to put it under 2020. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for another daily update and review.